Well, everybody, welcome to the webinar. Today we're going to talk about the end of trends. And so what I'd like to do is, really what we want to do here is we want to look at three different ways for identifying the end of the trend. And what I'd like to do is focus on the current markets so that you get sort of concrete examples of what this looks like. Now, at the end of our session today, if you'd like, we can go over some of the live charts as well, the ones that we didn't talk about during the session today. So if that makes sense, we'll get started. Now, many of you, I know a lot of you, obviously, a lot of people here are regulars and I see you all the time, and you know me. My name is Walter, and you can always email me at fxjake.com. I can't promise I'll get back to you super quick, but I try. So also, many of you know me from the book called Naked Forex that I wrote, and that's a lot of the stuff that we talk about here is, it sort of assumes a base knowledge from either previous webinars or from the book. And what I like to do is I like to trade without indicators. And so most of our sessions here, in fact, all of them, the only time we really bring up indicators is just to make fun of them. That's about the only time that they come up. Like, the only time they show up on my chart is just to say, see, haha, look at how that indicator stinks, or something like that. So, no, I mean, I don't have anything against indicators. I just think it's easier to trade without them. That's all. And in some ways it's better. In a lot of ways it's better. For a lot of reasons, many of which people don't even generally talk about, even people that trade without indicators. But I'm getting beyond the point. That's another webinar. So what we're going to talk about here is the end of the trend, and how do we know when the end of the trend comes? Because as we know, here, this is a great example here. This is the Euro-Aussie daily chart, and on the Euro-Aussie it's been marching up, up and away. Really nice strong trend, but what tends to happen at the end of these trends is that things will go, they'll rocket up pretty quickly. Like, for example, if you look at this move here, we would say that the market is down in a downtrend, right? If you look at the line chart, you can kind of see it clearly, but basically the market came up here, triple topped, and then started making lower lows. There's a low, there's a low, there's a low, there's another one, and another one, and another one. Keeps making these lower lows and the lower highs. There's a high, there's a high, there's a high, there's one, there's one, there's one, there's one, and so forth. Now, what happened though at the end of this little down move or downtrend is you see the market rockets up, and it actually moved much quicker from the bottoming out here, which looks to be, it was a double bottom. Let me zoom in so you can see it better. But essentially it was a double bottom with a nice little kangaroo tail there. Not the best kangaroo tail because it didn't really stick out and have a lot of space. But it was a double bottom, and then it went up. Now what I want you to notice is that it took 2 days for this market to go about 341 pips, all right? And if you look over here to the left, it took 15 days. Well, that's not fair because it was a double bottom, so it did reach it over here. Over here, it took 7 days. So it took 7 days to go 288 pips, and it took 2 days to go 340. Now, why is that important? Why is that something that I think I should talk about here? Well, the reason why is it's well known, that generally speaking, when the trend is moving, it will take baby steps, and it'll go, and you see a lot of this happening right here. It's just going do 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 do. It did get a nice, really accelerated blow off top here, and then it's come down. Now we don't even know if this is the end of the trend, but if it is the end of the trend, then this is what will probably happen: is it will fall rather quickly, and it will actually probably get to these tops, which is from where it is right now. It'll probably get down to 1.3576, which is 300 pips away. It'll probably get down there in like 3 days or less. it probably won't take, 6 days like it did from here to here. It's probably going to be a quick thing. And that's kind of why counter trend trading is so exciting to a lot of traders. A lot of traders like this idea of hooking into the reversal point. So let's jump into it. How do we know when we're in the reversal point? We can clearly see that, and this isn't the only one. We can look at any chart here, really. Here's the Aussie yen. So the Aussie yen has been doing really slow move up, and then at the end of it, look at what happens here. It's finally decided it's going to fall, and then boom, we get some giant candles. Huge bearish candles here. Whereas on the way up, look how tiny these candles were going up, and on the way down, they're huge. That's a classic demonstration of what happens at the end of the trend. It's classic. Jeno says, do you prefer strong candles breaking support or resistance, or doesn't it matter? Well, we're going to talk about that, Jeno. There are basically 3 ways that I look for reversals. So let's talk about the 3. The first that I look for is a price action trigger. So, for example, let's see if we can find a pair that's got, okay, here's the New Zealand Canadian dollar. Probably not the most traded pair, but what we see here is that the market went down, I don't know, about 826 pips. And as it was going down, it did the typical thing that you see a market do during a nice developing trend. And that is that the down moves were strong and the up moves were weak. Okay? So it's doing dun, 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 dun. So here's a down move, here's an up move, 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 here's a down move, and now we're into an up move. Okay, so what we have here are the first thing that I look for at the end of a trend, and this is the simplest way, the easiest way, and the best way, I think, for counter trend traders to start doing this sort of thing, is to simply look for a naked Forex setup. That's the easiest way to find the end of a trend. And here we actually have 2, okay? One would be this Kangaroo Tail right here, which I'm not actually convinced. Let me see. And for those of you that don't know the rules of the Kangaroo Tail, I'll quickly go over them for you. But the rules are that the open and the close must be in the top third of the candle. And they're not. Okay, so it's not a Kangaroo Tail. That one is not. But what we do have immediately before it is a belt. This is what's known as a bullish belt right here. And that's a great sign that the market's going to go higher. The way that I like to trade belts, and this is like in another webinar, but essentially I like to take a buy above the high, stop loss below the low. Now it did not trigger here on the next day, and for me it's ideal that it would trigger the next day. But what's nice about it is that even though it did trigger the next day, it gave us an almost Kangaroo Tail, not quite, because the open and the close were not in the top third of the candle. So it was just a little bit of a weak close, but other than that it was a nice reversal setup. And the combination of the 2 would probably be enough for me to help wait. I didn't take this trade simply because I wasn't watching this chart. I only just put it on my new charts today, and I was really bummed I missed it. But this is how I would do it. I put my buy stop above the high right there. Okay. It's not really doesn't want to play like this. Okay. What? What's going on here? Oh well, you get the idea. I don't understand why that's doing that. Okay, it's like that. The buy stop goes above the high, okay? And it's triggered on this bullish candle. Stop loss goes below the belt. Although, given the fact that I had an almost Kangaroo Tail, I probably would have put my stop loss below that Kangaroo Tail, and most likely. Now, whether or not we got triggered and stopped out. You know, if you're trading the belt, I just don't recommend. When I trade these swing points, I like to have my stop, you know, basically I want the market to make a new low to get me stopped out. So after this Kangaroo Tail printed, I probably would not want my stop loss below the belt. Now originally on this day I'd say yes, but on this day after the Kangaroo Tail I'd say no. Okay, so what does this tell us? This tells us this is the first way of seeing the end of the trend, which is a naked Forex setup. Here's another one, uptrend, pause, uptrend, Kangaroo Tail. Now this one also didn't quite qualify as the perfect Kangaroo Tail. Why? Because the open and the close were not inside the previous candle's range right here. Okay, there's several rules to Kangaroo Tails, and you know, people who trade other things like pin bars or whatever, or dojis or things, they don't have, I mean, it's a totally different type of setup. What I'm looking at here is specific things with this candle. Open and the close in the bottom third. The close is inside the open and close are inside the previous candle's range, between the high and the low of the previous candle, and the next candle should really trade lower. We have everything here except for this close is a little bit too high. However, it's a nice spot for it to turn around. If you look, you go weekly here. Hold on a second. One second. The best places that I will look for a reversal is on a zone. So look at this one right here. This is a, I don't think that qualified as a bullish big bearish big shadow. Let me just double check. Right here. Oh, that's not the one. I was looking at this one. No, the high isn't high enough. Boy, that would have been a beauty too. Here's another one. This is a price action setup where it has great space, room to the left, brilliant. Look at how this two candle formation has printed on a spot on the chart where the other candles haven't printed. That means it has space, room to the left, and that's really the perfect reversal. The only thing is the high on this candle is 83.99. Whoops. 83.99, and the high on this one is 84.01, so it missed it by 2 pips. But essentially this is the type of setup. Look how it's been going up, up, up and away, and finally with the blow off top it gives us that. It triggers on the next candle below the low and it just goes. That is very typical of the end of a trend. And now this right here would not, this is a Kangaroo Tail right here, but it would not qualify as a, to me that is not an uptrend and a reversal. That's rather a downtrend with a pullback. So that was not really a reversal. Here over here again we have an almost Kangaroo Tail, just barely missed because the close is not inside the previous candle, but again it's off to the races. My good friend Colin, he was trading, I'll show you another one here. This is the daily Aussie dollar, which I've been selling lately a lot. And Colin actually, he goes by Rob or Colin actually, but Colin took this Kangaroo Tail right here. Let's see if it fits. Open and close inside the previous candle. Does it have some space or room to the left? You bet. Absolutely. It's got plenty of space right here. Look at that. And this much of the candle, so space is, in other words, this much of the Kangaroo Tail has printed on a unique area of the chart, because look, there's no price action here at all. The market's not traded here. Look at that. That's amazing. Look, we could just keep taking this. That's like textbook, right? Now, the next candle trades higher, the stop loss is below the low, and it goes up. So that's the simplest way to find the end of a trend, is just to simply get a nice reversal signal. Here's another one that I took right here. Market's been going down, 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 down. Boom. We get a Kangaroo Tail here and we go up. Next candle trades above the high. It goes up, up, up and away. This was another Kangaroo Tail with a sell, but it wasn't. That's not really an uptrend. This is more of a sideways market, and we wouldn't really know that until we got to this point right here, because it's going down and then up, and then by the time it got here and started going up, we'd say, okay, maybe we're in sort of a 430 pip box, which we did end up being in. Okay, so okay, so that's the first way. Is there any questions about that? The simplest place to find them is when you get a kangaroo tail, like on the Aussie dollar. Kamikaze says, do you trade only daily time frames, or can this technique be used for smaller time frames? Yeah, I really like the weekly, the daily, and the 4 hour. And I've got a weekly trade here. This is on the Euro Swiss. Originally my stop was up here. I see a double top kangaroo tail that's got some nice space right here. Here's what I'll say about trading the lower time frames. It's harder. It takes more practice, and the reason why is it activates a different part of your brain, folks. So you're talking about the difference between how do I say it? You know how there's a difference between different games? If you're playing Monopoly, okay, that's one thing. And if you're playing Russian roulette, that's something totally different, right? They're completely different games. Well, that's kind of like the difference between trading the 1 minute chart and trading the daily chart. The great thing about the daily chart is if I go to work, all right, if I'm a trader who has a job, what can I do? I can wake up in the morning, check my daily charts. When I get home from work, I can even have dinner, laze around, watch some TV, maybe read a book, go for a walk or whatever, walk the dog, say hi to the family, and then check my daily charts. In other words, there's not a lot of, it's not a fight or flight activation of my brain. I'm basically just sitting there managing things slowly. Now, if I'm trading the 1 minute chart, and there are 1 minute chart traders out there, I've met more than a few, they will tell you, I'm talking about the guys that are pros, right? They're good at it. They're not people who, have just started or, just started trading or whatever. The guys who really are good at it, they will tell you that it's the equivalent of, strong, full-on concentration for a few hours. So if I'm a 1 minute chart trader and I trade the 1 minute Euro chart and I trade it for 3 hours a day, which would be probably about as long as you'd want to go trading the 1 minute chart, I'm going to tell you that it's full on. Like I've probably got some sort of background in meditation. Maybe I'm a martial artist or something. Though that's the kind of profile of the 1 minute chart trader. Does this stuff work on the lower time frames? Yeah, but the caveat is you have to look at all of the candles. So if I'm looking at a weekly chart, I can really concentrate on one candle and base everything off this trade right here. So this was a kangaroo tail right here, double top. I sold $23.99. My stop loss was up here at $26.55. I moved my stop loss to break even because why? Because I hit target 1. And now I'm waiting on target 2. But look how long it's taken since the kangaroo tail. 1 week, 2 week. Did it hit my target no, it didn't hit my target in the second week. Third week it finally hit my target. So last week is when it hit my target, and now it's messing around, and it might stop me out at break even. But the thing is, it's so slow moving. If I'm trading on my 1 minute chart, things are so quick. I got to know exactly what I'm doing before it happens. Whereas if I'm trading the daily charts, 4 hour charts, these ones are so much easier to manage. So my recommendation to traders who are getting into this stuff, it doesn't matter if you're using the MACD, the RSI, or naked Forex systems. My soapbox here is please start higher and go lower. Start on the daily or the weekly and then work your way down 4 hour, 1 hour, and so forth. It's just so much easier that way, because what ends up happening is you have to interpret a lot of what's going on around the candles when you're looking at trading 5 minute, 15 minute charts. It's more important for me to look at everything that's happening instead of just the one candle that I can hang my hat on. So hopefully that makes sense. All right, so off the soapbox. Yeah, Kamikaze. Okay, a couple of questions here. How do you okay, here, great question, George. We're going to get to that. Pan on fire, do you have idea for target as well? Yes. But in a trend, George says, in a trend you get so many reversal signals that they get taken out later. How can you tell which ones to take and which ones to leave out? Great question, George. And we're going to get to that later, okay? We're going to get to that later, all right? That's going to be when we get to number 3, all right? Okay, so the first thing is to look for a naked Forex reversal setup on your charts. Now, the second thing I would say, the second method, which I really enjoy using, is looking at the higher time frame. Okay, so let's say, for example, that I am looking at, and I'm just pulling this one off. You know, this is not. I just pulled it out of thin air, right? This is nothing. I'm totally shooting at the hip here. I'm not doing anything. This is nothing that I've planned or whatever. I'm just saying, boom, Singapore yen, because I know it's been in an uptrend basically, okay? It's been moving up, all right? So I know on the daily, it's been really marching forward. Same thing, you get this really typical pattern of candles marching forward, lazing around, marching forward, lazing around, marching forward, a little bit of laze, marching, lazing around, marching, lazing around, marching, and finally up here we see the spillover and the market is just rolling over. Okay, so method number 2 is I look to the higher time frame, and there's a caveat. Let me show you. Higher time frame guides my trades, and especially the close. Okay, I've made so much. Here we go. The higher time frame guides my trades, especially the close. What on earth is he talking about? Let me show you. Here we have our Singapore yen. We know it's been going up on the daily, so we move to the weekly. Now here's the question. Question goes like this. Why is it that we think the trend is over? In other words, how do we know that the trend is over? Well, the number one thing is, and I'll tell you what it is, it's the higher time frame close. If you only learn one thing here today, when you're trying to find the end of the trend, I would hang my hat on this one, George. What does the higher time frame close tell me? What is it telling me? Okay, now does anyone have a guess, if I were to zoom in on the recent price action here on the weekly chart, who has any, and I'm going to take this off because I don't want to confuse anybody, who has any idea of where I think the most important, you could probably make 2 here, but where are the most important closes on this chart? Can anyone tell me? Just off the top of your head. I don't, feel free to go for it. 72.90. 72.90, okay, so that would be right here. I'm going to post them all on here. 72.90 right here. I've got any other? Close of the second candle. Is that this one right here? Pan on fire, you talking about this one right here? Oh, second candle from top. Yep, right here. Okay. Pan on fire, I think you're talking about this area right here. Yep. John says 80. Okay, gotcha, Pan. John says 81.70. 81.70. 81.70. Ah, right. Okay, yeah. Right here. Right around there. Gabriel says lower close than the last red bar. Lower close than the last red bar. Yep, right here. Yeah, so Gabriel's, I think, Gabriel, you're talking about right here, right? 74.60, around there. Yep, gotcha, Gabriel. Vandermeulen says 75.10. Let's put one on 75.10. 75.10. Oh yeah, right there. Yep. Right there. Yep. Okay. I'm with Pan, says Edward. Looks like an evening star reversal. Right. Okay. Any others? Any other one? Anyone else want to throw their hat in the ring? Okay, 6850 says Matej. 6850 right here. Right there. Right there. Okay. Okay. Here's what I would say, and this is my point of view, right? I'm I'm the guy with the microphone, so I get to talk and tell you, but this is how I manage it, guys. I'm looking at the higher time frame close. So let's say that I'm watching the daily chart, and I'm on the weekly, I know, but I'm watching the daily chart, and at this stage, let me just move this just slightly, guys. I'm just gonna make this just tiny, little bit tinier. Just a touch. How do I do this? Let's see here. I'm gonna go like this. Okay. See if that works. Yep, that did the trick. Okay. What I want to do is look at the chart where we don't see what's going to happen next. Okay. We know obviously what's going to happen, but here's what I would say about all. And thank you everybody for pointing out what you thought the most important zones are on the chart. These are the ones that I have. Whoops, there was one right here. Basically right here. Basically right around 75.10. And then the other one I had was actually right here. Okay. Now let me tell you why. If I'm watching this chart and I'm watching the daily chart go up, I know I'm on the weekly now, but I'm watching it go up, and then I start wondering, when the market does this, I start wondering, is the market going to fade away here? Okay, actually, the market's going up here, and I really have no reason to think that it's going to turn around. But now I get to this day right here, and I think, this week, and I say, it's gone down a little bit. Maybe the Singapore yen is going to fade out. So then I go like this. Maybe the Singapore yen's going to fade out. See, at this stage, I would say, no, it's not. And then I'd say, it's still going. I say, maybe the Singapore yen's going to fade out and the trend's going to be over. Nope, still no reason to. It's back off to the races. Okay, maybe the Singapore yen's going to fade away. After all, I have an almost kangaroo tail here. I know last week was a big week, but there's a little tiny kangaroo tail here, so what might happen? Well, nope, it's going to keep going. I see a big red candle. Maybe it's the end of the trend. You know what I would say? Nope, I don't think so. Nope, I still don't think so. Still don't think so. I still don't think it's the end of the trend. Still don't think it's the end of the trend. Now it's the end of the trend. And does everyone see why I would say that? Because I'm looking here, and let me zoom in and make this really clear. I'm looking here at the cluster of closes, the most important spots on the chart, right? This is what we have right here. This cluster of closes. There are 4 weekly closes within for a weekly chart, sorry, not closes, but opens and closes, right? The candle, it's not, the close is this candle, obviously, but the opens here are all right here, a well-defined area. We also have another one right here, but the most important one is the close, okay? So in this case down here, the most important one is the lowest close right here, which is 75.42. Now this close right here is 75.46, so it's a little bit higher. That's the most important close. That's the lowest close we've seen. Can the market close below that one? That's the question. Can it close below that one? It couldn't over here. See, we got another low close here at 79.26, right on top of where all these candles were hanging out. So it's another cluster, but it couldn't close below there. Couldn't close below, couldn't close below, still couldn't close below. Finally, this one closes below. That to me is okay, downtrend on. And I can look at the line chart and see that, guess what? We've got some bouncing here on our major support and resistance level, and we had one there, but now we didn't hold there. And that's really critical. And you can see what happens the next week, which obviously was last week, is it went right back down. And where did it go to? The same cluster here. So the question is, we have a new lowest close, which is essentially 75.14. Right about where my line is here. I have it at 75.11, but it's right about there, 3 pips away. We have a new low close, lower than this 75.42 close. It's a 75.14 close. The question is, can we break below? Because if we can close below it on the higher time frame, we are off to the races, my friends. And I wouldn't be surprised if we went here or here. Well, yeah, these, in other words, landing on these highs, or landing right here where you see several. There was a close, there was an open, there was a couple lows right there, so there's another sort of mini cluster right there. It'll look a lot better on the daily chart. But the major point here to take away is that we have some market information that's coming across to us from the naked charts, and that is here, this candle told us, this week told us, we couldn't close on top of this. It didn't hold. And then right here we actually get another one last week again where we closed below over here, right? So now we have a new line in the sand. We closed below 75.42 and we closed at what? 75.14. So now we have a new one and we say, okay, can we get below there? So to me, this is a downtrend now. This is the end of the trend. This is where I should see some acceleration downward. That's really what this is all about here. By looking at the higher time frame, and especially the closes, I can gear up for what I think is going to be a down move. Are there any questions about that? Okay, so George says, why would you leave out the, okay, the hammer and the engulfing? Okay. Yeah, right. So George is talking about this. I'll tell you why, George. I know what you're talking about. A lot of traders who use candlesticks or whatever, they're going to look at this setup right here, which is the arrow that is purple, and they're going to say that this is a bearish engulfing. Why wouldn't you take a sell here? That's not good enough for me. And the reason why is it's not a bearish big shadow. I use a special type of bearish engulfing. Here's an example of one right here. It's called the bearish big shadow, and it's in my book Naked Forex, blah blah blah. But the point is that, you know, here is one right here. It's got a higher high, it's got a lower low, it completely engulfs the prior candle. It's the largest candle we've seen in the last 5 candles. Is it though? I'm not sure. This one might be a little bit bigger. That one's about 202 pips, and my bearish engulfing candle, my big shadow, is probably really close. And then the next candle trades lower, and then it goes off to the races. So this candle right here for me is not a bearish big shadow. I use a special case of the engulfing so that I miss out on losing trades like this one. And so what would make this good for me would be if the close was down sort of near this tail, and that the low of this bearish candle was lower than the low of this previous candle. That would make it a good setup to me. So that's why that wasn't an interesting one. Okay? Okay, so how do you plan your entry point? Well, remember what I said about the higher time frame. So this is what I can do now. I know that right now on the chart, so let me get rid of the purple ones because those are distractions. Right now I know that what? I know that we broke through the most important level and closed below it, and I know that we broke below the most important level and closed below it back here. So now we actually have a reason to sell the Singapore yen. I have a reason to do so, and so now what I do is I go back to my time frame that I'm going to trade, which in this case is the daily, and I say, because this is the question that Juan has. Juan says, well, how do you plan your entry point? Which is a fair question. So what are you going to do? I'll show you what I'm going to do. I'm going to go like this. I'm going to put my sell order right below the low here. And that is roughly 74.52. Okay? And I always draw them in blue for my entry order. 74.52. My stop loss goes all the way up here above. Now what I'm basically doing here is I'm using this formation, which is what's known as a broken kangaroo. This is a broken kangaroo tail right here. This candle right here. This is a busted kangaroo, broken kangaroo. Didn't work out, right? Now, I actually didn't take it. I was looking to go long, but I waited for the Asian session, and this is a totally different, this could be a whole new webinar. But basically, what happened was we had our kangaroo tail right here. Let me get my, gotta get the period separators here. Okay, so here is our kangaroo tail right here. From this area to this area. Market goes down, gives us a 1 hour kangaroo tail, and it rockets back up and gives us a daily kangaroo tail. So from here to here is a daily kangaroo tail. Now, during the Asian session, right when the market opens, it actually did make a new high. So if I just place my order above the high of that kangaroo tail, which would have been above this candle, if I placed my order there, guess what? I would have been triggered and I'd be in a drawdown now. But I don't do that. I wait for the Asian market to show up, and if it gives me a higher high in the Asian market, I use that as my hurdle. So instead, I have an order right here. I think my order actually was 76.70. I'm pretty sure it was last Friday. So it's right around this area right here. Okay? It never triggered it, and so boom, that's okay. Game over, no trade. But now we have a great setup, because now I have what's known as a broken kangaroo. The market didn't reject here. Instead, it's starting to mess around and act like what? It wants to fall through. So this is how I would manage this setup, is I would actually go, and this is great, it's a great pair to look at because this is a pair that I'm interested in trading. In a lot of ways, I'm interested in trading this one or the dollar yen. A lot of the yen pairs have similar setups. The euro yen is very similar to this. So what I have here is an opportunity to sell at 74.52. I can put my stop loss above this high, which remember was 76.64. So I put my stop loss at 76.70, or essentially where my buy order would have been had this triggered last Friday. But it didn't, right? And then what do? Well, so now I have an opportunity, because I know I've got a downtrend, because my weekly has told me we're making lower closes. Now I have a reason to sell here, and that's my way of managing it. Now let me just back it up and show you some targets. Now obviously we talked about 70 around here, around 72, which is a nice one, but we have to clear this area too right here, where these lows are. See where these lows are? This is around 73, 75, and these highs over here. It needs to get below that first. And once it does that, which, that's about, from entry, it's about 75 pips. Sorry, it's about 50 pips from entry. So it needs to clear that level. And then once it does that, then I've got 72. I've got a nice area down here around, I'll clean it up for the daily because I want it to be 76 right here, or even if I want to be more conservative, I can go off the highs up here at 77.70. These are the targets that I would be looking for in a setup like this. Does that make sense? Cool. This is the busted kangaroo tail, David. Yep. So hopefully that makes sense, Juan, so you see how we can do that. All right, the last thing to do, and I've talked a lot about this because it's somewhat of a interesting way to look at the markets. Number 3, remember I said we talk about 3 ways to find the end of the trend. The first one is we look for price action. The second one, which we kangaroo tails, bearish big shadows, bullish big shadows, things like that. Special case of the double top I call the moolah, or the whammy, which is a special case double bottom. All of those things. But we can also look for a change in the market patterns. What do I mean by that? Well, let's get another chart here. We can pull up the CAD Swiss. So here's the CAD Swiss. It has been going down, and essentially what we want to see in the case of a trend is there's 2 phases really. There's the explosion phase, or the real sort of how do you call it, like the strong trending phase, and then there's the retracement phase. And so what we have to do is make sure that we know which is which. And the way that we know this is by looking at the candles. Okay, so here is I mean, we can use this as an example. It's probably not the best example though. And the reason why is it's a very choppy chart. It is a downtrend, but I prefer to use a smoother chart, guys, just to show you. What's been good? The Aussie's been good. Let's see here. The Aussie's a great example, actually. Let's use the Aussie. We could use that one, but it would be clearer if we use this one. Okay, so I'm going to use this one. All right. So here is what you would say. This phase right here is what we call the explosion phase. Okay, and then we get the retrace. So this is the trending phase where the market makes big candles and they close down near the low. And then we get the retrace phase, which is this one. And what will happen is the candles will usually be a mix of colors. So see how in the trending phase, no, that's a bad color. That's a bad color. Hold on a second. Here we go. Yeah. So in the trending phase, in this gray box, look at how they're all red candles and they close down near the low for the most part. This one is an exception. It gave a kangaroo tail. And it basically hinted that we were going to be in a consolidation phase. Now, in the consolidation phase, notice how a lot of the candles don't close on the extremes. They actually close near the middle. For example, this, so it goes red, green, red. I don't know if that's red or green. It's actually a red candle, just. Yeah, just by 1 pip. There's a red candle, green, 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 red. Okay, so in the retracement or consolidation phase, what happens is the candles tend to close near the middle and they tend to go mixed and they don't go anywhere. See how these candles here, these red candles, they were all red in the down phase and they covered 272 pips. Now we have these candles and they cover like 50 pips, 52, well, okay, 65 pips, and they're closing near the middle. Then we have another phase here of the boom downtrend right here. Here's another explosion downtrend phase, and then here's another retracement phase, right? Same thing. Candles closing down near the lows. Here we go, red, green, red, red, green, red, green, green, red, and then another explosion here, which is short-lived, of course. It's basically a 1 candle move. And then we go into the consolidation here, right here. Green, red, red, green, and then we get another one like this. Okay, so we get 2 actually, and then we get a nice, actually, really nice retracement phase here. And again, what's happening during the retracement phase? Well, it's not going anywhere. The candles, these 2 candles during the downtrend covered 95 pips, all right? These candles during the retracement covered 131 pips, and there were 18 of them. It took 18 candles to go about the same amount that 2 candles took. That tells you you're in a retracement phase, right? And also remember, look at how many of these candles are closing near the middle. That one did, that one did, that one did, that one, that one, that one, maybe that one. I mean, when I say the middle, I don't mean dead center. I mean not on the edges of the candle, right? Then we get another explosion down. Then we get a retracement, explosion down, retracement, explosion down, retracement, and so forth. The question is the end of the trend, is the trend over? And the answer is yes, when it reverses. So what's happening here is our explosion is up, our retracement is down. Explosion up, retracement down. So what are we looking for right here? This is a typical bullish flag, or whatever you want to call it. I like to call it a windsock. Kind of reminds me of a sock blowing in the wind, you know, like they have at the airport. So you have this explosion up, you get this move down, drifting move down, and when we look for another explosion up, that's when we know it's the end of the trend. That's when we know. Why not break? So, yeah, so this, I'm expecting an up move. Why? Because when we see a windsock that flags down, we expect it to go in the direction of the recent move, which is up. So this is a down windsock, and the market should explode up. It's not 100%, right? Doesn't always work, but when we see a strong trend where all the the trending candles are green and the retracement candles, how are these retracement candles? Look how this candle closed about in the middle. Look how this candle closed in about the middle. Look how this candle closed about the middle. This is the retracement phase here. Here's the trending phase. Here's the retracement again, because we have red, green, green, red, green, red, red, green. So again, what do I call number 3? This is a change in market patterns. So the third way that I know that the end of the trend is a change in market patterns. That's what this is. It's a change in market patterns. Whereas before, the strong trending moves were big red candles and the retracement moves were up moves. Now what's happening is the retracement moves are down moves. This is a classic one right here. This is another classic one right here. And the up moves are the strong trending moves. So our explosions are no longer going down, but they're now going up. Now that doesn't mean that we're going to see the Aussie rip off 1,000 pips to the upside. It only means the downside trend is over. I need to write this down because it's a very critical point here. Just because it's a change in market pattern doesn't mean it's an uptrend. It only means the downtrend is how do we say, paused, okay? And that's the case with all of these things that we've talked today. We talked about the price action triggers, the naked Forex patterns. That just means that the downtrend or the uptrend is paused. Same thing when we look at the higher time frame. Doesn't mean it's going to rip off 2,000 pips in the other direction. It only means that the downtrend or the uptrend is now paused, and it's at the very least it's in a retracement phase, but it certainly isn't continuing in the direction of the trend. And the same thing with this. When the market pattern changes, when the strong moves are now the green candles and the weak downward moves are the mixed red and green candles, then I know that maybe the uptrend is or the downtrend is paused. It doesn't mean that it's over. It just means that it's reassessing. So what might happen is we might actually consolidate here. We might top out around 96.80 and bottom out down here around 93.30 and find ourselves in a box for the next month and just be stuck in this area, in this 300 pip range for the next 4 weeks. Who knows? But the point is, I know that given the change in the market structure, it's no longer doing what I expect a downtrend to do, which is to have strong downward candles followed by mixed upward candles. And now what we have is strong upward candles followed by mixed downward candles. Does that make sense to everybody? Juan says, is this all in your book? I'm loving your webinar. A lot of it's in the book, but not everything. Juan, you'll have to come to the you have to get these webinars to get the good stuff. But no, the book has a lot of you've got a lot of these setups. What's really critical here, guys, is that there's 3 different ways to see the end of the trend. The end of the trend can be great, very profitable, because it can move very quickly, and it's not hard to get a hang for this stuff. You can just a little bit of practice, a tiny bit of practice, and you can get really good at trading these things. It's not tough, right? Van, you should be able to get the book at any bookstore that sells trading books, or on Amazon.com or whatever. Yeah. Also, there's a really good DVD at FX Street where I talk about a lot of this stuff too. If this interests you, FX Street has a DVD. It's a 2 DVD set, of course, like all of theirs, and we talk about all this stuff. So there you go. Pound. Okay, let's look at current trades. I had a trade today on the pound. It was this belt right here. This is when the market opened. So this was a sell, and luckily it did go down. This is off of this one. So this was a bearish belt up at a double top here. It didn't trigger on this candle here. I was waiting for it to make a lower low. It went up, and then finally it triggered on this candle here. And where did it go? Well, it went to where we'd expect, off these highs right here, these highs right there, boom, 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 right there. That's where it went. And we'll see if it goes any lower, but basically I was waiting for this area down here. So I've now been stopped out at break even waiting for target 2. So for me it's over, but it could fade here. I think that if I had to make a choice on the pound, I would say it's undecided. I really would love to see the pound get up to about 57.50, 58 and show some bearish signs. To me that would be a brilliant spot to look for a sell trade. But I don't, right now it's not there yet. It's kind of like the Aussie, where it'd be really great if the Aussie could go a little bit higher and then just fizzle. If it could get up to say these highs right here at 97.70, that would be great. Okay, guys, I gotta go. They've got the next webinar. Thanks so much, guys, for your time. I really appreciate it. I hope that you have a wonderful trading week, and that you really, thanks a lot, guys. Yeah, I can do that, Boyke. Have a good one, guys. Thanks, May. See you later, Kamikaze. Bye, Paul. See you, Mitej. See you, Kevin. Take care, guys. Have a wonderful week. See ya. Bye.